Cow Hollow gets described as a clean, single-family market with a few details around the edges. The parcel data says otherwise. Only about 1 in 5 residential parcels here is actually single-family. That changes how you think about scarcity, value, and where opportunity really sits. The numbers are more interesting than the postcard version. Alejandro leads off.
Cow Hollow sells a very specific fantasy. But the parcel file is less romantic and much more useful. The detached house version of the neighborhood is real. It is just not the whole market. It is the premium slice people talk about, because it photographs well and sounds clean in a sentence. The broader reality is condos, multifamily buildings, and older, low-rise stock, doing most of the actual work. That matters because it changes what availability means here. It changes what competition means here. It also changes where a buyer should be looking when everyone else is busy chasing the same polished story. And yes, this is the kind of neighborhood where the mythology gets better press than the inventory. Andrew has the numbers that make that painfully clear.
We ran the numbers across 2,432 in-scope residential parcels, and the mix is the first reveal. Condominiums account for 1,081 parcels. Multifamily accounts for 875. Single-family is 471. So the visible version of Cow Hollow is not the dominant version. It is the premium one. The age profile is just as important. Median year built is 1922, and nearly 80% of the residential stock was built before 1950. The dominant decades are the 1900s and the 1920s. The dominant form is low-rise too, mostly two-story structures, then one-story, then three-story. Size reinforces the same point. Median building area is 1,389 square feet. Among single-family parcels, median lot size is 2,495 square feet. This is not a land abundance story. It is scarce, compact, expensive ground in a highly functional north side location. Alejandro has the opportunity angle.
The opportunity angle is where Cow Hollow gets interesting. Because the neighborhood is expensive, polished, and still full of properties that are not really about the house at all. There's a meaningful set of sites here where the underlying land position has already separated from the improvement story. These are not renovation targets. They are assets where the land is doing the work and the structure is almost incidental. Andrew has the screen data and the financial structure that shows exactly where that shows up.
Redevelopment screen found 112 moderate single-family candidates and 40 strong ones. Several of the strongest have lots above 3,500 square feet, buildings under 1,000 square feet, very old vintages, and land assessments above $1 million while the improvement value sits below $100,000. That is not a charming fixer. That is a land control story wearing a house costume. The financial structure confirms that read. Median land value is $689,075. Median improvement value is $623,377. Median assessed total is $1,374,262. On 43% of improved residential parcels, the land is already worth more than the structure sitting on it. The ownership pattern tightens the story further. Among residential parcels with an assessor sale date, median hold period is 11.3 years. More than half have been held more than 10 years, and nearly a third more than 20. That is not just affection for the neighborhood, it is California tax basis turning into supply lock. The pricing signal adds the final layer. Median confirmed sale price across the file is $2,099,500, but over the past 12 months, it is already $2,400,000. The price-to-assessed ratio sits at 1 times at the median, while the mean climbs to 1.72 times, which tells you the middle of the market looks current, while a smaller set of long-held properties still carries a much older economic reality. Alejandro has the buyer side read.
And here is what those numbers mean for a buyer paying attention. When land already outvalues structure on more than 40% of improved parcels, and when median hold periods run past 11 years, with California's tax basis keeping long-term owners in place, You are not just dealing with a tight market. You are dealing with a structurally constrained one where the supply picture is thinner than listing count suggests. The 40-strong redevelopment candidates are not outliers. They are the forward edge of a position that has been building for decades. Tell us in the comments, when you look at Cow Hollow, what matters more to you? The polished single-family story or the opportunity inside the layered housing stock? We want to know how buyers are running that calculation. Subscribe so you catch our next Cow Hollow breakdown before you narrow your search. Vladimir has the close.
That layered structure is exactly what Big Data Realty maps before a client ever writes an offer. In Cow Hollow, 43% of improved residential parcels are already land value dominant. Median hold periods of 11.3 years tell you the supply lock is real, and the gap between a 1x median price to assessed ratio and a 1.72 times mean tells you two versions of this market are running simultaneously. One is current, one is not. If you are evaluating Cow Hollow or comparing it against Marina, Pacific Heights, or Russian Hill, reach out to Big Data Realty. Our network of trusted local realtors uses exactly this kind of analysis before a client ever writes an offer. Big Data Realty. We run the numbers. You make the call.